Hello everyone, welcome to the Lord of the Coins. Today we'll be going over a short-term outlook on Bitcoin. So currently Bitcoin had this big impulse move up, consolidated, and it had another big impulse move up, and now it's been doing this kind of larger consolidation. So usually after a impulse move, you see a range form. For example, right here, we had this impulse move up, and we had this range form right here. Alternatively, we had this big impulse move up, and we see this range forming right here. So we'll actually go and mark out the range low, and the range high should be this swing high right here. Whereas these wicks right here are known as deviations. This other wick up here is also known as a deviation. So before we understand where Bitcoin wants to go, we need to understand how the markets are run. The markets are run on algorithms that hunt liquidity. This is because whenever liquidity is grabbed from retail investors, market makers are the ones that are making money. Alternatively, when retail traders win a trade, market makers are paying them straight out of their pockets. So I'll show you what I mean. So a lot of times when there's liquidity left in the market, the algorithms want to go and hunt for it. The algorithms will literally go up or down to sweep out all the liquidity. So this is what I'll show you. So as you can see, we have a gap right here between the two candles. I'll draw a line right here, showing that from this middle candle, let me zoom in, from this middle candle right here, the wick from the candle above it doesn't close the entire body, and alternately the wick from the candle below it also doesn't close the entire body. So we have this gap right here. So when there's gaps like this means there was a excess of liquidity right here. Since there's an excess, this liquidity wants to get filled and ends up getting filled by these two candles right here. As you can see, this candle body closes above it. If you go and try and look for more, you can see that they're pretty easy to find. There's another one right here. As you can see, this candle right here grabbed all the liquidity. If you go over here, there's another fair value gap, which is just an imbalance in the candle. It gets filled by these candles. As you can see, I can keep on going through this and showing you where all the fair value gaps exist and how they get filled by like this candle. Go over here to the last one, and it gets filled by this candle. So since this is the case, we can kind of see where Bitcoin is heading right now. As you can see, there is a fair value gap that exists right here, like this. And it looks like Bitcoin is trying to go and fill it. And afterwards, since we set a lower high and lower low, it's very likely that Bitcoin will go up here and then come back down. So if you were to structure a trade, you can structure a trade above the swing high and take profits at range lows. This would be an idea. So now that Bitcoin is accumulating, what can we expect? So for now, we can draw this fib from this range low to this range high and identify the value zones. So we take this 0.5 fib and we'll draw a line across. And anything in this top area is known as your premium. And anything in this bottom area is known as your discount zone. And since the markets are run on algorithms, the algorithms use Fibonacci values to actually bring the price into equilibrium. So when the price spends too much time in the premium zone, it'll want to kind of come down to the middle or into the discount zone, and vice versa. When price is in the discount zone, it'll want to come back up into the premium zone or into the middle. So now that we have a very short-term outlook on Bitcoin, which is filling this fair value gap and going down, where do we know how far it's going to go down to? So something to note is that Fibonacci is actually not a technical indicator. but we use it because the algorithms that the market makers use actually use Fibonacci values. This is because the markets really want to be in equilibrium. This makes liquidity grabs a lot more easier and more predictable for market makers. So where would Bitcoin go next? Something to note that you can see right here is that we actually have a lot of fair value gaps. And this is on the 1 hourly chart. We have another one right here. And we got another one right here. And since on this channel we like to trade alongside market makers like to trade on the daily chart. So we'll go to the daily chart here and identify an order block. So as you can see, before this large move up here, we'll take the last bearish candle, which is this one, and we'll set this as our daily order block. We'll make this green since it's a bullish order block. Go back down to the hourly so we can see this a little better. So as you can see, there's a lot of imbalance right here that the markets are going to want to fill. On top of that, we have these relatively equal lows, which means that there are pockets of liquidity right here. Anyone who went long would have set their stop losses right here. That are just prime areas for liquidity that market makers want to grab. So if you think about in terms of market makers, what can they do to make the most amount of money? It is to fill up this fair value gap because that's money for them. And I come down here, fill all these fair value gaps because that's also money for them. And also, since this is an order block, a lot of their orders are placed here. They probably have more orders that they want to get filled. So even if we see another big move up, price has come down to fill the rest of their orders. So now that we have a general idea of what Bitcoin wants to do, what are the levels that we are looking at? So in this order block, I'm looking at levels below this swing low right here. Right here. This is because there is a lot of liquidity in this area. So what I can see Bitcoin doing is making a move like that, end up coming down, sweeping up this liquidity before ultimately seeing a reversal back up. The reason I believe this will happen and that will go down is because of the FOMC meeting. The FOMC meeting is this Wednesday, and if the news isn't good, we're going to see some moves back down. But that's also going to tie into all of these liquidity gaps wanting to get filled, and market maker orders still wanting to get filled as well. For extra confluence, we can go onto the daily chart here and take fib from this swing low to this swing high. And then we'll go on a smaller time frame to the 4 hour to see exactly where the fibs line up. As you can see, this general area is also really confluent with the golden pocket. This is where price likes to likely retrace to. Ultimately, in the end, trading is a game of probabilities, and I'm here to just give you my opinion on what the highest probability is. So my current outlook for Bitcoin in the short term is that we'll see a little up to fill this fair value gap. We'll end up coming back down to fill up all this liquidity and hit more orders here. This is kind of like my outlook for probably the early part of November, and then we'll have to wait to see what the next FOMC meeting brings. If you enjoyed this content, make sure to leave a like and a subscribe and ring the notification bell, as my content can be time sensitive. Thank you very much for listening, and see you guys next time.